Hello, everyone. I am John Howe. I'm the financial planner here at Generation Capital Management, and this is another installment of John's Top Tips. It is March, and we're coming right up against the tax deadline here. So, if you don't have a ton of time to get all the things done that you need to get done before your taxes are due, I'm sure you've got a bunch of things that you need to get done, but you need to be aware of that tax filing deadline. I do have a few tips for you that you might want to consider when you're sitting down with your tax preparer, your favorite tax software. So let's dive right in. The first thing to remember is that you still have until your tax filing deadline to open an IRA in your name and be eligible to make contributions for the previous tax year as well as the current tax year. If you don't plan to make a contribution for the previous year, then I guess there's no real rush and you can take your time. But if you do want to make a contribution and you don't have an IRA, you do have a little bit of legwork that you need to do before you can make that contribution. It's best to hop on that now, so don't delay any longer. That brings us to our next tip, which is that a traditional IRA contribution might actually save you money on your taxes, if you can even believe it. If you qualify for a deductible IRA contribution, then making that contribution will most likely reduce your tax liability. Now, a lot of people know this, but some people don't. This is especially important to keep in mind for people who typically have to pay the government when they do their taxes. So if you have to write a check to the government instead of getting a refund, you definitely want to keep this in mind because it could save you some money. Instead of paying all that money to the government, see if making that traditional IRA contribution will lower your tax bill. You or your tax preparer can do a hypothetical scenario right in the tax software and see how much money that might be able to save you. We want you to make sure that you pay yourself instead of paying Uncle Sam, if at all possible. The last piece of advice is that if your healthcare plan is a high deductible health plan, you can make contributions to your health savings account or HSA until your tax filing deadline as well. HSAs are accounts that we can make tax deductible contributions to and use those funds for qualified medical expenses. There are particular expenses that are considered qualified. So you can reach out to us and ask us about those if you have any questions about that. Just like IRAs, this tip is especially important for anyone who owes money on their taxes when they go to file instead of getting that refund. Take a look when you're running your hypothetical scenarios on your tax filing. See how much that HSA contribution might save you. You might be really surprised by it. So here's a question for you. I'd love to hear your response. Do you have any interesting or kind of quirky rituals that you do around tax time? Do you start drinking your coffee upside down? Do you start wearing your bathrobe inside out? Anything interesting to see if you can get that good tax juju on your side? Let me know. Shoot me an email at jhowe@gencapmgmt.com. I'm always on the prowl for ways to make tax time a little bit more interesting and a little bit more exciting, and maybe get a little bit of luck on our side when we're trying to file our taxes. So again, my name was John Howe. I am the financial planner here at Generation Capital Management, and this was John's Top Tips.